Nigeria's aggressive monetary tightening has delivered measurable gains, cutting headline inflation by as much as 10 percentage points, according to the research cited by the Central Bank of Nigeria. Welcome to Business Point, where we extract the Nigerian economy and the government policies. I am Kike Lomo Okere. In a statement following the Monetary Policy Committee meeting in November 2025, CBN Governor Olayemi Cardoso says the decline provides strong evidence that bank policy stance is working despite tough domestic conditions and global economic pressures. Inflation data supports the claim. Headline inflation fell to 16.05% in October 2025 from 18.02% in September and is now more than 8 percentage points lower than the 24.48% recorded in January. The slowdown has been broad-based, covering headlines, food and core inflation, with momentum strengthening in the recent months. The CBN attributes the improvement to reduced foreign exchange volatility, easing food prices, better anchored inflation expectation, and a relatively stronger naira. Exchange rate movements have become less volatile, showing signs of market-driven appreciation, while foreign reserves have strengthened following reform that boosted capital inflow and improved Nigerian balance of payments. Beyond inflation, banknotes improving macroeconomic conditions reflected in the rising investors' confidence, stronger external buffers, and improved business and household sentiment factor expected to support long-term investment in the key sector. However, risks remain elevated. Global uncertainties, geopolitical tension, Nigerian designation by the United States as a country of particular concern, and the approaching 2026 political cycle all pose potential threats. Historically, pre-election spending has fueled inflation, weakened the naira, and strained external accounts. Fiscal reform, while necessary, may also introduce short-term pressure. Against this backdrop, the MPC opted to maintain a tight monetary stance, identifying excess liquidity as a major risk to price stability. The committee retained the monetary policy at 27%, adjusted the standing facility corridor to plus 50/-450 basis points, kept the cash reserve ratio at 45% for commercial banks and 75% for non-TSA public sector deposits, and left the liquidity ratio unchanged at 30%. The decision extends the CBN pause in tightening as policymakers seek to allow previous measures to fully transmit through the economy while consolidating recent gain in inflation control, exchange rate stability, and capital flow. Analysis shows that the CBN signals confidence in its strategy but remain firm on guard. While inflation is easing, policymakers are prioritizing stability over early rate cuts, wary of political and global risk that could quickly reverse recent progress. Nigeria's drive for financial inclusion has made progress but remains well short of its national target. The Central Bank of Nigeria says only 74% of Nigerians were financially included as of first half of 2025, missing the 95% target set under the National Financial Inclusion Strategy. The figure contained in the CBN latest Financial Stability Report shows that despite years of reform and digital expansion, more than 1 in 4 Nigerians still operate outside the formal financial system. Months after the 2024 deadline, the National Financial Inclusion Strategy remains the country's main framework for expanding access to credit, savings, payment, insurance, and pension. To close the gap, the CBN intensified agent banking under the shared agent network expansion facility, adding 96,094 new agents in the first half of 2025. This raised the total number of agents nationwide to over 2 million, with access pointing increasing to 1,903 per 100,000 adults. Institution reform also gathered pace. The National Financial Inclusion Secretariat strengthened governance with a new steering structure and specialized working group focused on products, delivery channel, financial literacy, and target interventions. Priority action included broadband expansion, improved consumers' complaint handling in the insurance sector, the rollout of an open banking registry, wider access to credit through movable asset financing, and stronger measures to combat electronic fraud. Digital finance adoption continues to rise. The CBN reports deeper integration of payment service provider, stricter transaction reporting, improved transparency on digital platform, and wider deployment of payment service bank and USSD service, particularly in the rural communities. As a result, 83% of the adults with transactional accounts now use digital financial service, up sharply from 60% in 2020, while infrastructure, agent banking, and digital payments are expanding. The data shows that access alone is not enough. Closing the inclusion gap will require faster progress in affordability, trust, financial literacy, and tailored products for underdeserved population if Nigeria is to meet its long-standing inclusion goals. Banking complaints in Nigeria surged sharply in the first half of 2025, underscoring rising customers' frustration even as regulatory intervention intensified. The Central Bank of Nigeria recorded a 143% jump in complaints from bank customers, resolving the vast majority of reported cases within the period. According to the CBN latest financial stability report, 10,704 complaints were filed in the first half of 2025, up from 4,398 recorded in the same period of 2024. Out of this figure, the Apex Bank resolved 9,771 cases, reflecting a higher resolution rate than in the previous half year. The surge in complaints was driven by increased public awareness of consumers' rights, stronger regulatory enforcement, and growing confidence in the CBN complaint resolution and redress framework. Deposit Money Bank accounted for just over half of the complaints, while other financial institutions made up the remainder. Electronic and card-related issue dominated customers' grievances, accounting for more than half of all cases. Fraud-related complaints followed closely, while account management issue, excess charges, and other concerns made up the balance, highlighting persistent weakness in digital banking operations and customer service. The financial stakes also rose sharply. Total claim linked to complaint hitting 21.42 billion naira and $5.09 million, far higher than the level recorded in the previous period. However, refund to affected customers stood at 17.17 billion naira and $3,432, indicating that not all claims translated into verified losses. While the spike in the complaint points to growing stress in the Nigerian banking experience, the higher resolution rates suggest improving regulatory responsiveness. The challenge is now prevention, strengthening fraud control, digital infrastructure, and customer service to reduce complaints before they reach regulators. The Nigerian Exports Promotion Council says the non-oil sector earned 6.19 $6.1 billion from exports in 2025, marking the highest performance recorded by the sector. The executive director of the council, Nonye Ayeni, made this known while presenting the 2025 non-oil export performance and outlook for 2026. Nonye Ayeni says the non-oil export earning rose to 11.5% year-on-year in 2025, surpassing the $5.46 billion recorded in 2024. She noted export volumes also increased to 8.02 million metric tons, up from 10% from the previous year, reflecting steady growth across agricultural, industrial, and mining products. Let's take a listen to the Executive Director, Nigerian Exports Promotion Council, Nonye Ayeni.
Non-oil export performance in 2025 reached an all-time high. The non-oil export sector rose. Export rose to approximately $6.1 billion, representing a year-on-year growth of about 11.5%, over and above the $5.4 billion recorded in 2024. This marks the highest non-oil export value achieved in the country for formal documented trade in the country, and also from the inception of the council almost 50 years ago. So we have indeed beat our own records of last year. So Nigeria has $6.1 billion in terms of value for non-oil export. This outstanding performance is not the total story, as a lot of exports still go informally through our various borders. Nigerian Export Promotion Council, in partnership with National Bureau of Statistics and Central Bank of Nigeria, as well as other stakeholders, we are working hard to mainstream informal trade. In volume terms, total non-oil exports stood at 8.02 metric tons, reflecting a 10% increase compared to 7.29 metric tons recorded the previous year. This growth in both value and volume demonstrates improved export activities across multiple value chains and market destinations. In 2025, Nigeria exported a total of 281 non-oil products. These products cut across agricultural commodities, processed goods, semi-processed goods, industrial inputs, solid minerals, reflecting a gradual progress towards value addition and broader product representation in the global market. Nigeria's non-oil exports reached markets across 120 countries, with Netherlands contributing 17.53%, Brazil contributing 10.35%, and India 7.63% of non-oil exports recorded in 2025. Therefore, these three countries emerged as a top 3 destination by value in non-oil export. Export to Netherlands increased by 32.4%, with products including cocoa butter, sesame, as well as others. Export to Brazil also increased by 19.07%. So within African market, Nigeria exported non-oil products to 11 ECOWAS member countries. This export totaled about 1.23 million metric tons, amounting to $272 million, constituting a 4.6% decrease of the total export. This decrease is as a result of the exit of Burkina Faso, Mali, Niger from ECOWAS community. However, in the period under review, we have other 2 countries in Africa securing their position as the top 20 global destination for Nigerian products, with Ghana and Cote d'Ivoire occupying the 13th position and the 20th position. Also, apart from the ECOWAS countries, Nigeria exported to 25 other African countries outside ECOWAS, bringing the total export destination in Africa to about 36 countries. The value of this export totaled 967 million metric tons, represents 3.4% increase of total non-oil export value. Non-oil export performance in 2025 reached an all-time high. The non-oil export sector rose. Export rose to approximately $6.1 billion, representing a year-on-year growth of about 11.5%, over and above the $5.4 billion recorded in 2024. This marks the highest non-oil export value achieved in the country for formal documented trade in the country, and also from the inception of the Council almost 50.
That presentation from the NEPC boss underscores a major shift in Nigerian export story, with non-oil earning hitting a record of $6.1 billion in 2025. The sector is steadily reducing the country's dependence on oil. The growth in both value and volume points to expanding opportunities across agriculture, manufacturing, and solid minerals, signaling stronger resilience in Nigerian external trade. This shows that the key test is now sustainability. Maintaining this momentum into 2026 will depend on improved infrastructure, access to finance for exporters, and stable trade policies to convert rising export volume into lasting economic growth. You are watching Business Points on Global Television. Stay with us. More updates after the break. Welcome back. If you're just joining us, it's Business Point on Global Television, where we extract the Nigerian economy and the government's policies. Before we call it a wrap on this segment, let's take a quick look at the stock market. The Nigerian stock market posted a historic breakout in 2025 as equity transaction more than doubled to 11.92 trillion naira, powered by strong domestic participation and a decisive return of foreign investors. Data from the Nigerian Exchange Limited shows that market activities surged by 113% from 5.59 trillion naira in 2024 to 11.92 trillion naira in 2025, marking the highest trading volume recorded in nearly 2 decades and signaling renewed confidence in the equities markets. Domestic investors remain the market anchor, accounting for nearly 78% of the total trade valued at 9.27 trillion naira. Foreign investors contributed 2.65 trillion naira, that is over 22%, reflecting a strong recovery in offshore participation after a year of subdued inflows. Trading momentum intensified towards the end of the year. Total transactions jumped by 42% to 1.38 trillion naira in December from 971 billion naira in November, and more than double compared with December 2024. The year-end surge was driven largely by foreign inflow as offshore trade soared by nearly 183% in December on the back of the large block transaction. Despite the foreign rebound, domestic investors continue to dominate. Local trades exceed foreign activities by 34% in December, with institutional investors clearly leading the charge. Institutional transaction rose to 603.6 billion naira, outpacing retail trades by roughly 30% and underlining the growing influence of pension funds and other large capital pools. Long-term trend reinforces the shift. Since 2007, domestic equity transactions have grown by over 160%, while foreign trade have expanded by nearly 330%. Even so, domestic investors have retained firm control of the market, anchoring liquidity and stability through changing market cycle. Nigerian cashew industry is emerging as a major non-oil revenue driver, generating more than $400 million in export earnings and reinforcing agriculture's growing role in economic diversification. Industry leaders say the performance reflects rising global demand and steady growth in the non-oil export, which climbed to $6.1 billion in 2025. Cashew alone accounted for over 300,000 tons of exports, making it one of Nigeria's strongest agricultural export commodity. Despite the gains, stakeholders insist the sector is still operating far below capacity. Processing level remain low, with only 20 to 30% of output currently processed locally. Expanding processing and value addition, they say, could multiply earnings several times over and unlocking significant job creation across the value chain. All right, this is where we call it a wrap on Business Point today. Join me again on Monday on Global Television, channel 365 on DSTV and 276 on Star Times. To stay connected, kindly follow us on all our social media platforms using @GlobalTVNG. Till I come your way again, I am Kike Lomo Ukiri. I celebrate you all.